Good morning, traders. It's 8:02 a.m. Chicago time on the 10th of November, 2016. Thanks for joining. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Lots of action overnight. The Nikkei, uh, the Japanese Nikkei market index has moved up 6.7%. Leading the gains in Europe, in Asia, and France's CAC 40 pushed 1.3%, advancing Europe. The key news is, of course, yesterday the Dow made new all-time highs. The S&P has pushed through some key areas that we'll go over in a minute, and yields have dropped 20 basis points. And there's talk that the that inflation is making a comeback. That some indications show that pricing with the stabilization of crude, prices are on the climb, and therefore more normal environment is potentially on its way. We'll see how that changes with the recent change in government here in the U.S. But that's basically what's on deck. New Zealand cut interest rates to the lowest rate ever, 1.75%. New Zealand's rates are usually much higher than that, so they're trying to stimulate over there. And then the initial claims came out today. Excuse me, at 254,000 versus 260,000 expected, so stronger. And continuing claims 2.04 versus 2.03 million, just slightly weaker. As far as what's on deck for today, we're looking for the monthly budget statement at 2 o'clock Eastern, expecting negative 75 billion for October. We have Fed Speaker Bullard at 8:15, 9:15, which is in about 10 minutes. And we have ECB Speaker Constancio at 9:50 Eastern, which is 20 minutes after the open. And that's really what we've got. Disney earnings after the market expecting $1.16 per share. Here's what we expected yesterday. Yesterday morning, of course, in the overnight session during the election, the market moved to 2028.50, which was the limit down for the overnight session, and popped all the way back up to trade around 2110 during the trader bite, as you see here, under the 2-day consolidation that we had Monday, Tuesday. So the expectation was for resistance and for the market to balance its inventory out. And the primary expectation is for it to test to start pushing back lower and to test down into the 2080 area. That did not happen at all. And I'm going to caution that it is really difficult to predict with any probability whatsoever, even using rule of thumb probabilities for how the auction normally trades. Very difficult to predict what the market's likely to do here for the next, today. Yes, yesterday for sure. Today, it's about perception. It's about what is the perception of what Trump is likely to do, and it's hard to put that on a chart in the form of a squiggly line as far as a plan, but we still have to come in with some sort of a plan as opposed to coming in and just trading from the gut. Trading from the gut, in my opinion, has no edge long term. The secondary hypothesis is that it does make an attempt lower, but it does not move lower. It simply holds sideways in this low volume node, this composite low volume node here, and it gets stuck here for a rest day as the market digests the election news. That did not happen. The tertiary hypothesis is for a choppy open, test down, and then start to push up. The first target being 2124. The key target in this area remains up here at 2153. That is the MC point of control. And eventually, as we push through, the expectation was for us to test that area and then start to consolidate for a push to 2170 to 75. That's the next key figure up. This did not go far enough. Clearly, yesterday the market was in a bit of a buying frenzy, much to everyone's surprise, really, or most people's surprise. But we did open up with, there's just, look at the number of bars here on a two-tick Renko, very wide OS here. The market just simply two-tick down and then just pushed right up on an open drive with a pullback. And then it finally found its sellers right up against the prior day's Tuesday's close and point of control before it rotated all the way down, back down to 2150. Basically blew out any hypothesis that I had. And then it goes all the way back up and pushes that temporary initial balance higher. And you can see here that it's just not able to get back to the mid. It does test the VWAP a couple of times, and it does give us an opportunity at the mid here. And then it turns back around and starts pushing itself through. So it was a difficult trade uh, early on yesterday. It was a difficult trade until it started to break up. Like you see here, once the IB high is gone, it starts pushing to 2153. Now remember, 2153 was the key target in the area. That is the point of control from July 8th all the way through till Tuesday. That was the point of control, and that's the key area to test. And so the expectation once we hit that area is that it's likely to consolidate around it. It pushed all the way through to the MCLVN, the next neckline, so to speak. So over here, what we have is a composite that looks like that, and it pushed all the way through to this crevice, and then we get this rotation, and these rotations are fairly wide, uh, pretty wide rotations from 2160 to 46. That's 14 points. That's usually an entire day's range. So the volatility is fairly high, even though the VIX doesn't show it. So here's what we would consider to be a normal behavior: push through, and then come back in and start to consolidate. And that's what we would expect at the point of control. This market, though, is not able to consolidate for long. There's a lot of higher time frame participation here, what we call the OTF. And so you see that both sides are pushing and shoving in both directions, mostly bullish. The market is of course rigged for the long side. We take out the October high. We take out the October high, which means that the one-time framing down we've had over the last 2 months has come to an end, and that's fairly bullish for the swing term or the intermediate term. So here it is again. It's stuck in this area. And then we finish off right in this area. So what we accomplished yesterday was a lot. It's really um, pushed everyone's expectations to the outside here, and we have basically moved. Hmm, looks like my composite is gone for some reason. So this is odd. Oh, yeah, of course. So what we've done here is you can see we've pushed right up against this point of control, and we have shoved our way through it all the way to the not only the next low volume node, but the key neckline at 2167.75 or 2167. That's where it's actually down here at 2166. That's where we are now. So this is likely to squeeze next to the next high volume node, and then that clears us for the 2185 new all-time high. That's how things are shaping up right now. And if you look at the weekly profile, you'll see that the weekly chart, you'll see that the market actually broke the downtrend on the weekly as well, and has breached to the upside. Again, um, another bullish sign there with the range being much slightly higher than usual. The extent of normal range is 53 points in a week on the ES. Here we are at the beginning of Thursday, so we've only traded 3 days, and we are already at 58.75 points RTH only. If you consider that we went all the way down to 2028 50, it's a lot more than that. But without the stocks being open, anything that's occurring overnight is not substantiated, in my opinion. So that's how things are shaping up and how things are playing out. Now, in the overnight session, we really made a run for it. We went to 2180.50, and you can see here it started with the Asian session a little after the Asian session opened, and it's been volatile all night. The volume overnight's 489,000, which is about 3 times the norm. So the volatility and the frenzy continues. We don't usually see that high a volume on a rally, so this buying is definitely more frantic. We've held the mid all along. We have pushed our point of control outside of yesterday's range, and we are lingering here. This looks to me like impulse again, and then we have a corrective move down, and this is likely to shift down just a bit before we make our next move. So my expectation is it's likely to push into yesterday's range again before it does anything further. Now, I would be lying to you if I said, yes, I have a high probability scenario for what is likely to happen next here. It's tough for me to say. Again, OTF is active, the higher time frame is active, money's coming into risk and is moving out of treasuries, and doing so pretty aggressively. And so, to me, the only real scenario is an open auction and a response to 2159, potentially 53, and then a continuation higher is the primary hypothesis. We've got to go with what the program's already doing, and we're in an up channel already. Let me turn down my news feed here. This guy likes to yell. Um, and we still have a gap beneath us. So overall, the key scenario is for a pull down that advertises lower prices and inspires buying, and then for the market to rotate up and start pushing towards the 2180 quarter, which is an old week high. 2180 quarter comes from the high of the 26th of August and the 6th of September and the 7th, and that to me is a pretty decent target from 2153. So that's what I'm looking at for now as far as the key plan for the day. The secondary hypothesis is for it to attempt to push higher, and it finds sellers and it pushes back into yesterday's range, re-exploring what it had done the prior day and looking for 2144 as the key target below. Okay, so that's those are the two key scenarios. Again, the point somebody pointed out again, and I need to remind everyone of this every once in a while. What is the point of these plans, these hypos? It doesn't tell us where to get in and get out. The point of these hypos is to uh, put your frame of mind into considering context, the overall context of the market as you're trading. So it's not intended, the trader bite's not intended to tell you, here's where I'm going to sell, here's where I'm going to buy, and give you trade recommendations. I'm not doing that. The trader bite is intended to let you know here's what's framing the market, what potentially could be framing the market today, and here are the potential key plays. participate in those plays. How I participate in those plays is to identify which side the strength or weakness is on, and to go with that. And the goal here is to repeat a routine that I've been doing for over 10 years. Repeat, come in, and have some sort of a plan. Lay out a plan, a route that you would follow, a map that you would follow if the market agrees with your perception of what is likely to happen. And then and then you can then push your trades based on a moving average entry, maybe a reversal pattern, or whatever you're using. It doesn't matter a fib. It doesn't really matter how you're entering the market. The goal is to instill in you the importance of having some sort of a plan to go with as you start your day, as opposed to coming in and just firing from the gut. Yeah, I feel like they're gonna buy it today, so I'm just gonna get long and add and add and add. Well, maybe there's context here that does not support a high probability of continued buying. Maybe the buying is initial, and then it's expected to rotate down. So I spend a lot of time in the beginning of the day just watching what the bigger time frame and the market on open orders are doing, and how the range is being set early on. There are some key statistics that occur early in the session, and you look to lean against those to formulate your ideas of what's going on. Okay, so this is not intended, the intent of the Trader Bite is not to be here as something that you just jump on it and hey, hypo one is to buy, so I'm just going to buy. That's not what it's for. I'm putting out a video shortly about how to use it, how I'm using it, and to find an edge and to take trades. So hopefully that'll be useful to you. Good luck today. Take care. Stage 5 traders, we've got our webinar at noon today. It's an open AMA. Good luck. Take care.